Mastering equipment financing. I love it. I love it. I love it. So I am Tony Cimino, our VP of Business Development here at ROK Financial. I'm going to give these gentlemen a second here. We'll start to my left to introduce themselves.
Thank you, Tony. I'm Greg Amendola. I'm the SVP of Sales here at ROK. And again, once more, thank you all for joining.
And guys, my name is Ryan Vahey. I'm a commercial finance advisor with our team. And thanks for jumping on.
Don't be afraid of that thing. Yeah, don't be afraid of that thing, will you? It's not going to bite.
Got to get used to it. Got to get warmed up.
I'm more afraid of him biting it.
Yeah. Oh, man. So just to kind of give you guys a little bit of background, right? My role here is specifically lead generation. Greg's role here is specifically closing those leads that Tony generates, and Ryan's role is to really understand the transactions that we're doing, and how can we place those transactions in a way that's most beneficial to the business, right? So between the three of us, we have a really good handle of the businesses that we work with, as well as the opportunities that they face, the challenges that they may be coming across, and how they utilize who we are to help them solve those challenges or take advantage of those opportunities, right? So really quick, some stuff about ROK Financial that maybe you know, maybe you don't know, right? Some things that we really like to kind of pride ourselves on, right? A few things, right? Number one is speed. I remember when I started in the business a long time ago, written on the whiteboard when I walked in on the very first day was time kills all deals, and I'll never forget it because it's probably the only thing that's held true. If I'm being honest, since I've been in the industry, it's probably the only thing that's remained exactly the same. And the reason is because business owners don't wait. They're not waiting to take advantage of an opportunity for the financing. No, they're looking to take advantage of the opportunity regardless of whether the financing's there or not, right? They're going to look to make those things happen. So number one is the speed of funding. Number two is the relationships that we have and the products that we have access to. The systems and processes that we've built, the technology that we continue to reinvest in. These are all things that you benefit from when working with ROK Financial. And who we are and what we do is pretty simple, right? We're here to help you guys gain access to funding for your customers, right? And be able to share that with those customers in a way that's simple, easy, and effective for you. Really, as far as the whole system's been built, it was built so that you can take advantage of it, right? I remember right after COVID when we restarted, the business here, it was more about, all right, how do we extend this to as many people as possible, right? Now we have over 15,000. I think it's over 15,000 affiliates on the platform. Look at that, over 15,000 affiliates on the platform, and we funded over $2 billion. And that's kudos to you guys. It's really not us. 95% of our business every year comes from these relationships with you guys on these calls. So definitely excited to be on with you guys. Definitely excited to be on with you gentlemen and get the chance to talk about today's topics, right? But before we get into equipment financing specifically, let's talk a little bit about all the products, right? Let's talk a little bit about that mix, right? And what makes that most effective for a business owner. Greg, I'll start with you on that.
Sure. So, I mean, a range of products, right? As you mentioned, my job is to kind of close those transactions and make sure that clients are getting access to the financing that they best qualify for and what will align with their ultimate goals. And just to name a few, I mean, we have the equipment financing. Obviously, we're going to get into a lot more detail on that later on. But things as far as AR lines of credit, SBA loans, some term loan products, working capital products, and really lines of credit. All the above can be applied to really any industry and any client out there. Again, it depends on what they're going to qualify for and what's going to make the most overall sense once we understand those challenges or their opportunity and can align that product best for that particular company.
I always think it's great to have this many products too, because we'll have a lot of customers or clients that come in the door maybe requesting an SBA loan. But then, when we're able to set that realistic expectation with them, then it may be a 30-day process, but they need money by the end of the week for, say, equipment or payroll. We're able to rely on our line of credit, working capital, or equipment financing products to get that done. So really being able to have this mix and being able to work through the really overall outcome that the client's looking to get with the product, it really helps us align what product is going to be best fit based on their qualifications and also what they're looking to use the funds for and how quickly they're looking to get it.
No, it's a great point. That one switched a little quicker than I thought. And really, it's the mix of all the products that allows us to help, a wide range of borrowers. Right? It's a scenario where we want to help the most people access the most options, because let's face it, it's the competition or the market that will actually be most beneficial to the business owner, right? It's why they don't allow monopolies, right? It's why they shut those down. It's because if one person controls the whole marketplace, well, then they set the pricing, right? But when you have multiple products and multiple lenders and banks that offer those products, that competition is great for business and great for business owners, because that allows them to really understand, am I getting the best option? Right. And ultimately, by weighing those options against, the different lenders that are out there. I mean, when we get an approval, right? Let's say lender A has the best term, lender B has the best rate, and lender C is offering the most money. We're going to communicate that amongst the lenders and let them know, hey, listen, this is what's out there, because we want to know that there's the blended offer that comes out for our customer is actually what's going to make the most sense, right? The one that's got the best rate, term, and dollar amount is what's going to win, right? So we try to share that information amongst the lenders and allow them to compete for the business more than anything. Let's jump into the topic though, right? What is equipment financing? Before we go to the next slide, I want you guys to tell me, what is equipment financing? Ryan, let's start with you on this one, because I know you're going to give a bit more of a technical answer, and I'm excited for that.
No, absolutely. I mean, what an area of opportunity, especially for our referral partners. Because, not something that we've particularly focused on too heavy in the past. But here over the last 24 months, definitely something that we've really started to build a lot of relationships and find a lot of success in. So when we're talking about what is equipment financing, we're talking about equipment that a business owner is looking to purchase, and it's going to help them generate revenue within their business. That's going to be key for every equipment financing transaction. You don't want to see someone that's trying to finance a vehicle that they may be driving to job sites, but then also driving home on the weekends and taking their kids out to lunch. That's something that equipment lenders consider very risky. They want to see that the equipment's particularly going towards business use and business revenue generating purposes.
I love it. I love it. Greg, what is equipment financing?
It's pretty straightforward. Everything that Ryan had just mentioned in a nutshell, but also, hey, trucking company needs to purchase 3, 4, 5 new vehicles for their fleet, and they don't want to take out that working capital or their cash or personal funding to actually buy it. They can finance those trucks or any of that equipment, yellow iron, kitchen equipment, really any business. A business like ours, a lot of the furniture, fixtures, computers, things like that can all be financed. So there's a whole world of equipment that can be financed, even software we've had success with for certain particular industries. So really, any business out there, about 80% of them will have equipment, and most of that equipment is deemed financeable.
Yeah, absolutely. And equipment financing is exactly what it sounds like, right? It's taking that specific asset and tying a specific financing to that asset, right? Meaning that if you have multiple pieces of equipment, I just was talking to Greg about a deal maybe 2 weeks ago, where somebody was looking to purchase 5 trucks, and nobody wanted to do 5 trucks, but somebody would do 2, somebody else would do 2, and somebody else would do 1, right? And that's okay, right? Because technically each of the assets is their own. It's an individualized asset where then you can have a specific financial instrument tied to that asset, right? And that's what makes equipment financing so unique is like every product is going to be based around, all right, well, when did they acquire the equipment, right? What was it being used for? Did they acquire a bunch at once, right? Was it all on one invoice? Did they get it from other places, right? So let's get into it a little bit, right? Equipment financing is an industry that is extremely large. Over $1.7 trillion worth of equipment is purchased year over year, right? And over 80% of that is then financed, right? So that means that the opportunity for those of us, right? You guys on this call, us here at ROK Financial is immense. There's so much opportunity out there, right? If you talk about a billion seconds, right? Like $1 billion. Well, a billion seconds is something like, a few years, right? A trillion seconds is 32, right? I think a billion seconds is 3 years, but a trillion seconds is 32 years. It's crazy, right? It's crazy when you start thinking about trillions and how much money actually is out there and goes into this. It's unbelievable, right? So when we're talking about equipment, right? And Greg, you started to touch a little bit on this, on what you were just saying, where, we have those fixtures, those different types of equipment that are, or categories of equipment that are out there, right? Tell me a little bit more about that. Now that we're into the equipment categories, like tell me a little bit more about that. Break
Sure.
that down.
So let's just pick one, right? Let's pick construction, for example. Right, a construction company might have those Kubotas, those yellow irons, those Bobcats, diggers. That can all be financed. All that yellow iron. Specifically to what you're mentioning, Tony, like furniture, fixtures, assets, things like that. Like this podcast table here can be financed. These microphones and think about
the lights,
a lot
camera.
of the different kind of equipment can be financed. I think recently about a expansion restaurant that we had funded for equipment financing, and the list was immense. We're talking, range hoods, stoves, all the booths, the tables, the chairs, even the tap.
Oh yeah,
taps,
yeah.
the taps for all the different craft beers, the lighting that they have, the 80 different flat screen TVs, all the audio and visual equipment, down to the wires. So all of that those items can be financed. Your walk-in freezers, your walk-in refrigerators. That can all be financed for that kind of particular industry. That's their part of their business, right? For healthcare, for example, that's an industry that's up there. When you go to the doctor and they sit you up on the table with that fresh sheet of wax paper, that chair can be financed. The EKG machines, the scopes, everything else that they're looking at, those are all financeable items.
Yeah, I always like to use like the dental office, example, right? When you walk into the dental office, this table and chair you see the receptionist sitting at, right? That can be financed. The waiting room, all the stuff in the waiting room, that can be financed. When you get into the dentist's office, right, and you're actually in the individual office, in the individual room itself, from the chair you sit in to the computer that they're operating on, to the x-ray machine, to all the different machines that they're going to utilize, to where you spit your water, to all of it, right? It can all be financed, right? And it all falls into these different categories here, right? And this is where you can start to kind of formulate your plan as a broker or as somebody who assists with financing on how you can help a small business owner. Now, I don't want to go too crazy, because I'm sure we're going to get deeper into it, right? But what makes equipment financing unique is the terms that they then offer on these products, right? A lot of times you're seeing terms 24, 36 to even 60 months a lot of times on these transactions, where if a business owner is looking to get access to cash these days, the best businesses out there, Greg, are qualifying for what, 24 months?
Correct. 24 months, sometimes even out up to 36.
Yeah, and that's if you're super lucky, right? But the average business with equipment financing, you're talking about they're getting 48 or 60 month options, because cash is different, right? Cash there's no way that they can come and repo your cash, right? But they can repo a piece of equipment, and that's what makes equipment financing unique, is there's an asset tied to it, right? So they offer you better terms. A lot of times the terms that you get allow you to then save your cash or your ability to access cash later in the business. So it's important that you understand that as we start to go into things like here we are with qualifications, right? So as we talk about qualifications, right? There's always there's a hot debate here in our office regarding credit and the credit of borrowers and how it works, and the reason is ROK is a broker, right? And as a broker, we do a soft pull of credit, which 99% of brokers in our industry don't do. But we do a soft pull of credit. And when we pull credit, we see typically our equipment lenders like to see at least a 580 plus credit score on all of the transactions that they're operating with, right? So that's why you see the 580 credit score here. You might see other areas of opportunity or other flyers that say 600 plus credit. That's because when you talk about equipment financing specifically, the better the credit, the better the chance they have of getting approved, right? If it was Ryan's choice, I promise you it would say 700. And that's because that's just going to be that much more quality of a borrower, right? And the quality of credit is why Tony always wins and gets to put 580 on here, because quality is what matters, right? And when we start to talk about quality of credit, I don't want to go too deep into this, Ryan, but let's talk about that for a second, right? When you're talking about somebody that is a 600 borrower that can get approved for equipment financing, what are you seeing on their credit score that's or their credit report that's allowing that to happen?
Absolutely. No, great question. So, I mean, just the example that I always like to go back to is a lot of referral partners will send us an opportunity and say, hey, I have an equipment financing deal. The client has a 700 credit score. Does that really help us out? Not too much, because the score doesn't really help us. What we're concerned about is the history and the depth of the trade lines within the credit. So typically we're looking for 5 active trade lines, and trade lines can be things like credit cards, auto loans, installment loans. Mortgages are always great to see, especially with equipment financing. So just going back to Tony's question, when we have someone that, say, is a 620 credit score borrower, but they have, say, 20 years on their credit history, they have 10 active trade lines, that's going to be a much more favorable client for us to get approved than someone that has an 800 credit score but only has 2 years of credit history and maybe 1 or 2 credit cards on their account as well.
Well, and that's the quality of credit, right? When you talk about somebody that's got a longer history, there's a greater chance that their history might be blemished, right? Whereas somebody that's got brand new credit, is not viewed the same way, right? In fact, I see a lot of times in regardless, this is equipment financing, but regardless of the product, if you have bad credit, a lot of times that's better than no credit, because there's at least a history there as to what you've done and how you did it, and I'm not saying that, we're only looking for bad credit borrowers. I'm telling you that, what it really comes down to is the fact that there's a history there that can paint a picture and kind of give us what needs to be told. Now, I just want to talk about the difference between, small ticket and large ticket here, right? And Greg, I guess we can, jump over to you on this one. Like, as far as like large ticket equipment financing versus small ticket equipment financing, what's the difference, and why such a difference there?
So more money equals more risk, right? So typically up to 250,000, as you can see on your screen here, with lower risk, lower dollar amount. Typically, all that we'll need is an application, the most recent 4 months of the business's bank statements, and that invoice for the equipment that they're looking to purchase. Where, just like working capital and some of these other webinars we've done before, that same dollar amount, that higher than 250,000, and every lender's different. They all have their thresholds, but let's just use 250 as that benchmark. It's going to entail a little bit more of going into the financials. Can that business support that payment and that equipment over the long haul? Which is why they will ask to see the most recent few years of the tax returns and the P&L and balance sheet for that business.
And the reason that I mentioned it to you first, Greg, was just because I don't know if you remember a few weeks ago, I came to you with the trucking deal, and the company was looking to buy 5 trucks. Each one of the trucks was $187,000, right? So what we were able to do was go to 5 different lenders to get that customer approved. Why? Because it kept them under the $250,000 per lender, right?
Yes,
so
sir.
the 5 different invoices just became, hey, truck 1, truck 2, truck 3, truck 4. It didn't matter, but then we're able to help that business owner keep all of that under the 250K. Had you looked to combine even 2 trucks, you would have been over that 250K, and it would have become a much more rigorous underwriting process where they're going to look at much more detailed information. Thus, it takes a lot longer. Not a lot, but it takes a longer amount of time. There's more due diligence, more back and forth. Whereas, hey, when you have these under 250,000, and this is where I wanted to just point out, like, it's per piece of equipment, right? Like, it's per invoice. So as long as you can break out the invoice to show, hey, some of it's over here, some of it's over there, well, we can finance it in different areas, right? And that allows us to help you guys kind of stick and move and really provide the most value to your customers. All right. So a quick overview of our financing network of lenders, right? I've been attending networking shows and conferences and in the equipment finance space for years now. Got my certified lease finance professional designation. Equipment financing is an industry that's been around for a long time. But what I would tell you is it's one of those industries that, like, everybody's tight knit. They all know each other. It's unique, and we found ourselves working with a lot of the brokers and lenders in equipment financing and helping their customers get access to working capital, right? And every once in a while, we'd come across a transaction where we'd get some deals done, right? And we would work an actual equipment financing transaction. I mean, from my very first days in this industry and working with Greg and the team, we were placing equipment financing deals back in 2016, 2017, 2018. It's not new to us. But as far as it being like a formalized product on our site, all of the bells and whistles that kind of go along with it. I mean, from Jamie, the production coordinator, to having the team built out and the processes, it's been much more formalized in the past 24 months, like Ryan was talking about. And that's largely to do with the fact of we've seen an uptick in the need. Right, we see that business owners that are borrowing money right now, they're starting to change why they're looking to borrow money. When you were talking about 2021, 2022, a lot of the reasons that they were borrowing money was to sustain. It was so that I had my business in 2023, right? It was so that I had my business in 2024. And then 2024, let's talk about that year for a second, right? I can tell you that anytime I've been in this industry for enough election cycles, I know anytime there's a presidential election, there is always uncertainty. And that is like the worst thing for banks and lenders, is to have any type of uncertainty, right? And the one thing that you do have now is certainty for the next 4 years as to what's happening, right? So as you've started to see in the last, even just 90 days, we've seen business owners that are now looking to take advantage of different things, right? Like I was telling you about the trucking company that was buying 5 additional trucks for their fleet, right? A lot of times what we were seeing in the past couple of years is they were really only replacing the ones that needed to be replaced, right? They weren't adding new. There was no net new going on. Right now, what we're starting to see is like, hey, I might go get 2 additional trucks because I just want to add more, or I'm buying out a competitor, or I'm doing this, or I'm doing that. So when you have these things that started to happen for us, we realized, well, we need to formalize, and we need to take advantage of this, right? So, I don't know if you guys were on the last equipment financing webinar we did about a year ago, maybe even a little bit longer than that. But even since then, the times have changed, right? We are in a place now where there's over 25 lenders that do equipment on our platform, and each of them has their own niche or focus, and that's what makes equipment so unique, is everybody has their little bit of focus where they take a certain preference with a certain type of asset or industry, and they're able to really help in those scenarios that help that type of business or that type of business owner. So this is the most important part of equipment financing, is having the right lender mix, having the right, as they say, you got to have an ass for every seat, right? This is that, right? We are able to confidently say at this point, hey, regardless of the category of equipment, regardless of the profile of the borrower, we're going to be able to help you and your customers gain access to equipment financing, right? So a couple of frequently asked questions around equipment financing, right? Some things that I always like to even refresh myself on, are the things on the screen here, right? I'm going to defer to kind of you guys because I know you guys are the ones kind of getting these questions, but I know as far as like when we talk to partners, some of these things come up, but a lot of times these are more business owner focused. So.
Yep, absolutely. So, I even just saw somebody in the chat ask about, sale leasebacks or if you can get money out of existing equipment. And that answer is yes, right? Sometimes business owners come to us and they need additional capital for the business and they want to utilize some kind of an asset that's in that organization. Now, typically, the equipment style for sale leasebacks or the type of asset that most lenders are going to want to see are things like yellow iron, right? Those bobcats, those forklifts, things that would really tend to hold their value and not depreciate. If you have a restaurant owner that wants to utilize their ovens and their ranges for collateral to pull cash out, that's not really the best asset class. The equipment lenders don't want to take that back or repossess that kind of a thing, or pay to store that, right? So the juice has to be worth the squeeze, so to speak. So things like yellow iron is good equipment that you can leverage cash and utilize as a sale leaseback.
Yeah, and the key there is, like Greg mentioned, is it's got to hold its value, right? And it's got to be easily transferable between one business and the next, right? I would assume getting an oven out of a restaurant is probably not the easiest thing, and then getting it to your warehouse, and then from your warehouse to the next place is probably not the easiest thing, right? But if you're talking about a John Deere or Kubota, that thing will roll right off the lot, and right onto the next trailer,
Put it right on the flatbed.
Yeah, right onto the next trailer. So like it becomes common sense lending, when you're talking about a lot of that stuff. So definitely feel free to run those scenarios by us. We're more than excited to help out with that, and see what we might be able to do. Right. As far as some of the different things that are on here, right? As far as like the app only thing, right? I would tell you guys this. What makes ROK unique is we're able to help regardless of the scenario because of the product mix that we offer, right? In my years of doing this, I can't tell you how many times I've seen somebody come in looking for a specific piece of equipment and us be able to get them cash to go buy that equipment, right? So if there is a scenario on here where you're like, hey, I want to be able to buy this piece of equipment or this or that, but, I may not meet the criteria or I don't have that 580 credit score or whatever, you might have saw a qualification that, your borrowers don't meet. Well, I can assure you that there's probably 3 or 4 other products on the ROK platform that can help them do the same thing. So definitely don't hesitate to reach out or talk about these scenarios with us. We're more than open to have a conversation about how any of the products might be able to help in the scenarios that you're coming across.
I'm glad you brought that up just before we go on. Yeah. Only because, a lot of times in conversations with certain business owners, right, they may want $200,000, right? And they may not explain or quantify the use of funds. They'll say, I need 200,000, I'm looking to expand, and leave it at that. A lot of people would leave it at that and not really dig it deep and find out, okay, how much of that 200,000 is equipment in your build out or your expansion? How much of that is working capital, cash flow, hiring, and kind of separate that dollar amount of equipment versus that dollar amount for cash. Because a lot of times we can get, or that business owner could qualify for that dollar amount, and then segmenting out those different products and making them all work at once cohesively. So definitely an important part of the process as you're speaking to your clients and really trying to segment out how much for equipment and can we finance that kind of equipment, and then furthermore, how much is an actual cash need.
No, absolutely. It's a great point. just really quick housekeeping. If you guys have questions, please utilize the Q&A. I see a lot of great questions in the chat, but I don't want to miss them, as we get down down to the nitty gritty here, right? So a couple of red flags, right? As if you were playing football, these would be yellow flags. You guys would be replaying the down. No, so some things that you should just keep in mind that we're not going to be able to help with, and this is specific to equipment financing, right? If you're looking to purchase vending machines or that type of equipment, we're probably not going to be able to help. Those types of machines, right? Like ATMs fall into that too, right?
Exactly.
Yeah. Those types of machines. We're not going to be able to help with recent bankruptcies or, if somebody's behind on their child support or, and any of these these things that might come up as far as realistically, any of these things, they're pretty much the automatic non-starters for equipment financing, right?
Absolutely. And, the biggest one that comes up again, and like I mentioned early on, is non-essential equipment. The biggest thing that we have to do for these equipment financing opportunities is really build a story around them. When you have, say, an accounting firm that is looking to finance a printing press, if we're just sending that to the lender, just saying it like that, it doesn't really make sense. An accounting team is working with small businesses and consumers to do tax returns. Why do they need a printing press? But if we're able to explain the story, they're launching a new marketing campaign. They're going to be printing T-shirts for their clients. They're going to be printing advertising material. That was actually a deal that we got done in the last 6 months. So. With equipment, there's definitely a lot of opportunity, and just building the story around how that business is going to be using it to help them generate revenue. And just another one I saw on the board as well, high utilization of revolving debt. When you're talking about high utilization of revolving debt for equipment financing, you're typically talking about anything that's over 50%. I know for other like mortgages or other financing products, it's going to be a little bit lower, a little bit higher. But for equipment financing, it's typically going to be 50%. And then anything resulting with collection accounts or charge-offs that's recent within the last 3 years, that's going to be an immediate red stop as well. So anybody that has that on credit or may come up in conversation, you're definitely going to want to have them have that resolved before going ahead and exploring any opportunities.
For sure. All right, couple quick success stories. I'm going to let you guys jump in here and kind of take this bull by the horns, but I always like to point out the different categories of the equipment, right? The different industries that we help. So you guys that are watching today, make sure that you're understanding that it's not one piece of equipment that we finance or any one industry. It's really everything.
Yeah, no, absolutely. And the really cool thing about this slide is all of these opportunities are in a different industry, and they all really come with a different story as well. So, just talking about the medical software one, that was a deal that took us about a week and a half to get done. So pretty quickly for the customer, and pretty unique as well, as it was a chiropractic software. And with software, the unique thing is you typically want to see it's on a licensing agreement. So since that one was on, I believe, a 48-month licensing agreement, that's what the term is going to be matched for equipment financing. So that one was pretty unique for us to get done in software. A lot of people ask about software. Is that something that you could do? Is that something you could help with? Absolutely. The number one question is you want to ask if it's on a licensing agreement and how long that is. If it's 24, 48, 60 months, absolutely something that we're going to be able to help with. Again, just focusing on that it's going to be able to help that business generate more revenue. Another cool one was a restaurant with the walk-in fridge. This one definitely took a little bit longer to get done, but it's definitely a unique scenario because it was funded within a week, but was the deal ultimately done within a week? No, because the walk-in fridge had to be built by the vendor, and they required 50% of the funds to be deposited with them for them to begin the construction of the walk-in fridge and then also install it. So working with our equipment financing partners, we were able to find a lender that was able to pre-fund the 50%, have have the vendor begin and install the equipment. And then once it was installed, they called and confirmed with the client that it was installed, everything was up to par, and they went out and funded the remaining 50%. And then, the last one that we have on here is one that we see most often and is always going to be our favorite type of equipment deal. Because as Tony and Greg mentioned before, yellow iron equipment is always going to be the most favorable for equipment lenders, specifically just because it holds its value so well in the
Yep.
secondary market. So if a client was to default on equipment financing transaction, what they do to mitigate their risk is they come and take that equipment and sell it as quick as possible as well. So they're not using a fair market value to justify that equipment. Typically, they're using a liquidation value or what they could sell it at auction quickly. So typically when we're talking equipment financing, the best types of deals for us always are going to be the yellow iron, Bobcat, the drills like Greg had mentioned before, even the dump trucks as well. We'll see some of those as well. Those could get into the high dollar amounts, even $250,000, $500,000. Just have to think, once you go above that $250,000 mark, it's going to be substantially more risk for the lender. So what they require is they're going to look into more financials and more underwriting just to ensure that their risk is mitigated and it's something that they can make money on.
For sure.
Absolutely. And even on some of the yellow iron things, like when you're talking about 18 wheelers and trucks, that are long haul or even short haul, they'll go out about 5 to 7 years, depending on the make and model.
For sure.
On the yellow iron, a lot of that stuff, because it holds its value so well, it doesn't depreciate all that much. They'll go and look at older equipment, 10 to 15 years. If it's a forklift, a Bobcat, a Kubota, a lot of those yellow iron pieces can be financed even if they're a little bit older. So
It's a great
definitely
point.
something to keep in mind.
Yeah, if you're talking about a piece of technology, it better be from the last 3 years.
We don't
You know?
finance Windows 95?
No. Unfortunately, you can't finance the original iPhone anymore. But you can finance the 16. No, I'm kidding. I'm kidding. But no, technology is one of those things where it changes so quickly, right? In 3 years, that technology is obsolete, right? So think about that when you're approaching these transactions, right? There's a much higher likelihood that we'll be able to help somebody with a used piece of equipment when you're talking about that yellow iron construction equipment versus something like technology. So great point. All right. This is where I jump back in, kind of take over for a couple of minutes. You guys kick back and relax, and I'll get this presentation wrapped up for us with a bow on it. Just talking to you guys for a second here that are on the call with us, right? If you're not currently partnered with ROK Financial, I want to make sure that while you're on this conversation, we get a chance to not only pitch you, because that's what we do best, but also that just make sure that you have a good understanding of what it means to partner with ROK, right, or to work with ROK, and everything that you see here on your screen is what we've designed as benefits to our affiliate platform. But the most important thing, and I always say this to literally everybody that I work with, if you were the CEO of ROK Financial, realistically, right, how would you want it to work for you? Right? Because that's the way that we want it to work for you, if I'm being honest. We want you to have that same type of confidence in us and our team that you would if you were the CEO of our business, right? Where that, hey, we're here to get it done for you, for your customers, in whatever way, shape, or form that means, right? So we have partners that like to be involved in the process. We have partners that don't like to be involved. We have partners that, like to come on the webinars, and we have partners that don't like to come on the webinars. It doesn't matter to us. What matters is, does it work for you, right? So the best thing that I would say is, let's talk about how to structure a partnership that makes the most sense for you guys. All of these things that you see here on your screen are what you're going to get out of the box when working with ROK Financial. So as far as like referring business, right? I know we're talking about equipment financing here specifically, right? But as far as referring business to ROK, it's really easy. You don't even need to know that they need equipment financing, if I'm being honest, right? We require that you provide us a business owner with their name, their number, and that they have a need of financing, and we'll take it from there and do the rest. You just sit back and relax and earn the commission as we get those deals closed for you, right? We're going to be able to qualify your referrals, get them over to underwriting, get them approved, help them understand the deals that they've been approved for, pick out the best option for them in their business, and ultimately get that money into their checking account, right? As quickly and seamlessly as possible. So when partnering with us, it's an easy way for you to leverage your network of small business owners and into the financing industry. Couple quick things that you might not be aware of that you have access to when partnering with ROK. Number one is you're going to get access to our Salesforce CRM. You'll be able to track all your referrals, commissions, check out some live dashboards of all your information, right? We offer personalized landing pages and customized landing pages where whether you're talking about a co-branded experience with ROK and your brand, you're talking about a ROK branded experience where it's simply ROK's brand, or a white label experience where it's just your brand that shows on the landing pages. You get access to all of that. You get access to DocuSign. Every time you create a lead in our system or somebody fills out your landing page, there's a specific link that you can utilize that they can then fill out a DocuSign application that's coded back to them and you as their referring partner, right? It's just a way for you to access the technology that we've already built, right? We also have our proprietary offer calculator where we'll take a blended offer of all those offers I was telling you guys about before and basically show a sliding scale of how much money a business owner is qualified for, right? Maybe on the low end, it's 50,000. Maybe on the high end, it's 150,000. And depending on how much money they keep or how much money they're looking for and what term they're looking for it on, it will break down their payment for them. It will break down how the deal works for them. And then ultimately, when they find out which one, figure out which one they want, and they click, hey, accept this offer, it's going to prompt them into what's needed to move forward with that offer, right? So this is just proprietary technology that you get access to through working with ROK. And really gives you guys and your customers a good understanding of what's going on and how it's happening. So if you are brand new and you're not yet partnered with ROK, I invite you to scan this QR code here on your screen. You fill out a quick short form. Our team will be reaching out to you here shortly. We're definitely excited to chat with anybody that's new to the system, new to working with ROK. Definitely excited to develop those relationships. But also, I know we got a ton of existing partners on here. So I'm trying to get through this thing here because I have a major announcement that I'm trying to drop here. I do. I've been holding it in all presentation. Jen gave me the thumbs up. Yeah. Jen gave me the thumbs up that I'm good to announce it. I'm waiting here. So make sure you guys are keeping a lookout for info on our March webinar. And we're super excited to get a chance to interact with you guys. If you didn't get a chance to reach out to us through the QR code, you can always send us an email, visit our website, or give us a call. Our team is always willing to chat and speak with you and get you guys any information or anything that you guys might need. Definitely excited to chat with all you guys. I'm going to stop the share of my screen. And then really quick, if you're still with me in the chat, let me know. I know that we got some questions there, but let me know that you're still with me in the chat. And I got a major announcement to make. I do. It's pretty major. All right. So, major announcement for you guys. Major announcement. As I like to say, the best just gets better. There's a lot of different lending platforms out there these days. Right. When I first started in this industry and I used to walk up to Greg's desk and I'd be like, yo, Greg, you got a second? And he'd be like, no, I don't. No, he was always awesome. He always would take time to show me what was going on. But when I first started
you're too kind.
When I first started in this industry, guys, there was not anybody out there that was that was focused on referral business. We were the first ones to really formalize that process, really put together an extreme focus on working with partners and helping them offer funding to the small business owner customers that they come across, right? And in that, we've continued to evolve. We've reinvented ourselves a few times, from dropping the portal for you guys to then moving the portal from an individual website over to Salesforce, where now it's directly in our CRM. So you guys are operating within our Salesforce CRM, and pretty much 10,000 different iterations in between. Literally every day there's new stuff that rolls out for referral partners. But I'm more than excited to announce today to you guys the ROK Financial Affiliate Loyalty Program. And this is a raffle that you guys are already entered into just simply for doing what you need to do. And that's fund your deals through ROK Financial. So what I'm getting at is that in the first half of this year, we are going to give away $5,000 in a raffle to anybody who refers and funds a deal, right? You'll be entered into the raffle for every successful funding that you make. So if you refer over one business and they get funded, you got one entry. If you refer over 5 businesses and they get funded, you got 5 entries. But in the July webinar, I believe it's the July webinar, we're going to be going live in the July webinar to do a drawing of anybody who was entered into this, that was able to enter into this raffle. And we're going to be raffling off $5,000 to you guys. So this is just a give back to our partners. We wanted to make sure that we're really providing the best experience to you guys, right? We talked about maybe a vacation. We talked about maybe flying you out to the office and letting you meet the team. We had a ton of ideas, and then we basically all were like, cash is king. Everybody loves cash, right? So we tried to figure out a way. How do we give away cash, right? So we came up with the raffle, and basically for being a loyal affiliate of ROK and funding your deals through ROK, for every successful funding that you have, you'll be entered into the raffle. So is this exciting information? Does it help you guys out? Does it make you want to fund more deals? Let me know in the chat.
I'm excited. I mean, I don't know about them, but
I was going to say, how do I enter?
You didn't know, right?
no.
Yeah. That was a best kept secret right there. I've been sitting on that one for a minute. Being on with us, really appreciate your loyalty, and that's why we're rolling out the ROK Affiliate Loyalty Program.
I can't wait for the drawing in July.
We'll make sure you're on that webinar too, Greg. Definitely excited to be on with you guys today, chat equipment, and get a chance to speak. Hopefully you guys pulled some information out of this. Like I said, everybody who registered will get a copy of the presentation, as well as a recording of today's webinar. Thank you guys for rocking out with us, and make sure you stay tuned for announcement on March's webinar. Thanks, everybody. Have a great day.